Hi everyone and welcome to Inderes TV. Today we're going to talk about Hexagon with Analyst Pauli Lohi. Hi.
Hi, Isa.
So the Q3 showed continuing signs of gradual recovery in organic growth, but it was kind of unevenly distributed between the segments. Could you shed some light on that one?
Yes, recently recurring revenue has been growing fast, and then the hardware basically lagging behind or even negative territory. Currently, there is some signs of recovery, especially in the manufacturing intelligence. And I think it seems natural to me, if you look to the markets, manufacturing sectors are, I think they are more stable compared to sectors like construction, which is really burdened especially in Europe and China. And that's why manufacturing intelligence grew 4%, but then Geosystems, that is more reliant on construction, was more flat still.
Okay.
But they have also seen some gradual improvement, but just not yet in the, let's say, long-term growth mode.
Okay, but getting there.
Yeah. And then really the bright spot was autonomous solutions.
Okay.
Which grew 19% year on year currently. It was boosted by strong demand in the aerospace and defense sectors.
Okay, yeah,
and also mining was good. Then Octave, that is now a new segment because it will be independent soon.
Yeah.
So they had a bit weak growth. It has usually been, I would say, between 5 to 10%, but now it was just close to zero, the growth. So
is that a disappointment or?
Yeah, it is, but it could also have something to do with this transformation, and they have been divesting some less profitable parts of those businesses. But let's see how it goes. There was strong comparison figures from the previous year, so I would guess that they will recover more close to 5% at some point, but maybe not to that 10% like a couple of years ago.
Yeah, okay. So the profitability is clearly under pressure, but it's partly because of large one-off costs. Could you tell us more about these and how big they are?
Yeah, if I start from profitability in comparable terms without these one-offs, it has declined mainly because the demand has not met expectations this year, and the company had invested to growth and increased their fixed cost base, and put effort to R&D and so on. And now when the demand has not, it deteriorated after this Liberation Day, basically, and that has hit profitability.
Yeah.
So also the weakened US dollar and other FX impacts have some impact.
So there are a lot of factors there.
Yeah. But then there was this one-offs in Q3, some 300 million euros, which is actually almost all of their adjusted EBIT. So it's significant. Bit over 100 million was related to the cost-saving program that they have recently kicked off, and then under 200 million was related to write-off of redundant products and technologies, and these redundant intangibles have been accumulating over time, and now they're kind of cleaning the house with the new CEO.
So that was because of the new CEO. I was thinking, why did they do all at once? But the new CEO wanted to clean the house.
Yeah, I would see that way.
Yeah, okay, but that was just a one hit wonder, as you said.
Yeah, and of course they said that they will be more strict in the future to make the books up to date all the time.
Yeah,
and also they have renewed their operating model, which could help with that.
Yeah, so a lot of stuff going on.
Yep.
And the big thing going on is the great transformation happening with they will be divided into two players, Hexagon Core and the Octave. So what do you think about this split?
Well, I think it makes sense because Hexagon Group, as it is today, is formed through 200 acquisitions during the this millennium. So it's a lot. It's complex company. So this is easing the complexity and improving the strategic focus, because the Octave will be pure play software business. It's focusing in, I would call it like specialized ERP systems that they have for designing and managing different industrial assets and infrastructure. So it's very different from Hexagon Core, that is more about sensors, hardware, also software, a significant part of that, but it's more kind of used in the manufacturing floors and kind of real life, whereas Octave is more management tools and software. So
but they are clearly dividing between the two of them.
Yes, very different businesses, and I believe that Octave will get higher valuation multiples, and that's easier to make new acquisitions with high valuation if your own multiple is higher. So I think this also lets them execute their strategy more like in more free way in Octave.
Okay, yeah, that sounds good.
About the timeline,
so what do we know about it?
So it seems like it's progressing as planned. That they plan to list Octave to US-based stock exchange in the first half of 2026.
Okay.
And Octave will have its CMD in first quarter, and then Hexagon Core its own CMD in the second quarter.
So they already have.
Okay. Yeah. So there will be lots of interesting events around this company.
Yeah. Coming up. Yeah. Interesting. So you already mentioned a bit about it, but the company also has initiated a new cost saving program. Do you know where the cost savings will hit the most, and what will be the outcome of this?
Well, they haven't given too much information, like what exactly will be affected inside the company. But I would believe that since this is kind of result of 200 acquisitions, there is so much overlapping processes and also office spaces. So if you integrate these, you can reduce people and reduce leased spaces. So that would be the most obvious, I think. And they are also renewing their like management model to make new kind of accountable management chains, and that's also meant to improve the agility of this company in the future.
Okay.
And these savings, they will be in place beginning from Q4, but gradually, and fully in place by the end of 2026. So
okay, so there are really a lot of stuff happening in 2026.
Yeah. The past 2 years haven't been easy for Hexagon, so now they are doing a lot to change that situation.
Yeah, back on track. So what about the valuation and our recommendation?
Well, I think that the valuation is a bit high. Roughly, adjusted EV/EBIT is roughly 20.
Okay.
And I think historically, it's quite close to the historical levels, but also I think that their growth prospects for the, let's say, next 12 months or so, they are not that great. I mean, there's been some deterioration in or saturation in growth in certain segments, and we don't yet have so good like outlook that the market would turn so much better. So tight valuation. Also, if you consider these two, Octave and Hexagon Core, as separate, probably Hexagon Core, because it's still more reliant on hardware and more cyclical, it would get multiple maybe between 16 to 18 EV/EBIT, and Octave maybe 20 to 25, maybe let's say 24, and Hexagon Core 18. It doesn't allow any upside to the stock. It's actually maybe 10% below that level. So I think that the valuation is too tight.
Too tight, yeah. So what about our recommendation at the moment?
We have reduced recommendation. I don't see a huge downside either, but it's not just attractive.
Not attractive valuation. So thank you so much for all these comments, Pauli.
Thank you.
And if you want to read more about Hexagon, go to inderes.se. And if you want to discuss more or even ask Pauli questions about it, you have the possibility in our forum. Thank you.